Now we'll talk about kind of the development of ranges and tops and bottoms of ranges and how to see if things are moving up or down. Yeah, maybe we'll not start on a 1 minute candle. Maybe we'll go to a 5 minute candle to start. And we're going to pick a random spot here. Yeah, sure. This one looks good. So you're in this move right now. Let's say we bought right here for some reason. We bought right here for good reason because it's a hold level, right? Buy there, that's fine. How do you see if this thing is going to move up or down? You know what, maybe we're going to do it on this chart instead. I think this is going to be a little easier to do it here. Let's just remove everything is gone. Nothing here, good. And pick a random spot again. 5 minute chart right here, looks good. So you're in a move. We're going to talk about a long position here. We have this here. So we bought this position. We are going to go to the replay tool, cut it off, and starting to dissect the chart architecture more. And when things are moving up or down and whatnot. So we're in this move right now, right? Like we've bought in here. So our order got filled here. So we're going to say 95.68 is where we bought. Okay. So the first thing we're going to do is we're always going to kind of set this parameter from the past of what's happening in this move. So, okay, good. We have something here. You know, we would have had this to this, and that's fine. And that trend breaks, make it move up, and blah 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 blah. And you know, you array it out to this one here, to this here. Eventually, you get to this here. So you've said, okay, this is where I should be buying right here. So yeah, okay, that looks good. It was a good buy, and so we're going to move our order back actually a bit to 95.58 because this is really where we should have been buying because this one was already knife caught there and it moves up, and this one's knife caught there, and you know it's going to move up. And so you're deciding what to do in this trade, right? So you're starting to think of like chart architecture, and if you were to reverse this chart, it would be very much the same thing, right? So just keep that in mind. The first thing we know is that there's kind of no moments back here that are untested. So we know if this level gets lost, it's time to get up at the trade, right? So we set our buy at 95.58. We can set our stop at 95.55, for example, a few dollars under. Maybe we want to go to like, well, we've already bought here. So now we need to establish if we're going to break the trend or we're going to get stopped out of this trade. So we'd go to 1 minute charts here and we would say, okay, yeah, we bought this. This has already been tested. We can't use that. This one's not tested. Even though it looks like it's tested, it's not. And then you'd have this right here, and this one is tested. So you'd kind of be like you have an option here of two things. You can either stop out of this trade on this side of the chart, which means the price can't really drop below this point because this is what was holding it in the past. So you pretty much stop out. Like if the bottom of this candle here is the low is 95.66. You'd stop out at like 95.64, right? Your entry's at 95.58. Wait a second, I said that wrong. I was on the wrong candle. 95.55 is a low. So you've bought in 95.58 and you know the low is right here, and you can see it's already moved down to here. So now you have an option to stop out either a few dollars under this. So your stop would be something like right here. And we'll change our stop to green and we'll work with this only. This is the way Binance says that they have like a green thing for the stop. So you'd set your stop here. Basically, if you come down to this price again and you go below it, you'd want to pick some kind of number that just limits your losses, right? Like maybe something like this, 47.73. Looks good. $10 away, not too much of a blow. 10% is nothing too bad, right? So then we've deleted this and we can continue going through this trade, right? So this is tested. Now you have a decision to make, and we're going to use two stops here. You either stop the extreme piece of the move, right? Or you follow this trail to the next untested level and you stop below that. So in scenario one, right, we are stopping here for a small loss. In scenario two, we are locking up our profits. So, if we had bought in rate, I believe 58 was our buy, 58. At a minimum, we walk away with 37% on this trade, right? And that's fine. So you have a choice there to make. So that's the first thing we do with this chart architecture, because that's what it's going to be, right? Like you're moving these stops up, and at this point you can assess the larger time frames and say, okay, where do I want to stop out? There's nothing on the 5 here. Okay, that's fine. Is there anything on the 3 here? No, that's tested. That's fine. Brings us back to our 1 minute, and then you could go to this point and say, okay, well, like let's stop out right here. Maybe there's not a strong enough candle. So you're going to actually, in my opinion, I would just actually leave it where it was. I would go here and I would just stop out here, leave that 37%. I don't see locking up an extra couple dollars here really worth it over what you could potentially lose in the trade, right? Okay, so like right here, I'm not really certain if you would have been stopped out there because it actually should be underneath this right here. So there should be something like this. And you also have now your trend developing on the other side, right? So you guys are looking at this move, you're thinking about exits and how to get out of this trade. And let's make the larger trend here. So maybe that looks like a 1 hour. This is something we need to do before we make any of these decisions. So it's not really anything on the 1 hour. So we need to make the 15-minute trend, then that's fine. You'd have this right here, but more so I'm looking at something like this right here. So more of the immediate piece to the move like this, right? This, or maybe like this, give it a little bit of room to breathe. So, you can stop out right here and then on magnet. Okay, we got to go to the 1 minute to find that point. Really, you want to hold that piece of the move because you can see how it's polarized on either which side, right? Like you could even technically come back up to this level and set your stop slightly above this. Like you could set your stop slightly above that, like right there. You could. Again, this is dependent on how you want to lock up profits. If you want to constantly be in profits and not worry about the larger moves, you would do something like this where you're setting your stop along the trail. Now, this isn't really tested. So I think in my opinion, I think I would put it here just because I could see it coming down to this level before breaking trend. So again, there's kind of three decisions to be made here. You either worry about the larger piece of the move, you try to lock up profits as often as you can, or you take the most logical. And that's the way I would look at this. Try to take the larger piece of the move. This one is try to constantly lock up profits regardless of how big they are. And this is the most logical spot because this is kind of the in-between of both, right? Like if you lose this, you're pretty much making, losing your move. Possibly you end up holding this again, but the risk is there. So at this point, if you lose this, you might as well just, sacrifice down here. You lock up at least some profit. So we're just going to hit play here and see what happens. Yeah, see, your stop would have been triggered there. And it's why I don't like using too high of a stop because really you want to get to the, and let's stop it here for a second. And it's really why you want to really make sure you see the untested levels. And then even here, you could even say that same thing here, right? So we're going to keep this one on the screen and we're actually going to mark this. And you'd be in the same scenario where you're defining like, okay, what's the lowest point of this move, right? Versus what is untested. Like this is untested and this is. So you're kind of in that same point where your stop is either going to be here or here, right? So if you're in this move personally, again, I would set my stop here and I would probably set it just like a little bit over that candle, like right there. You're still locking up some profits. It pays for your trade. And I don't really see a lot of value in taking this extreme knife catch to make this is decent, 89%. That's not bad. But again, I really don't know what the target is up top. Rather, what I do have is I have a couple trends that look like they're going to try to break off one of these hold levels. So I'm just going to go to the 5 minute here and just let it play through for a few minutes. Oh, Jesus, we picked a good time frame. And that's kind of exactly where you'd want to be, right? You want to be looking at your untested levels, right? And not trailing it up too much because the reality of this trade is like this. It can go all the way to right here. Right? Like it can go right here. This is our final untested level. So we could have went all the way to here, pulled back and made that trend like this before taking that large move. So you don't want to miss the move, but you don't want to also exit out in negative profits. This top stop loss here, or this bottom stop loss, I suppose in our scenario, this bottom stop loss is the point where you're saying, okay, the move is failing. Like there's nothing really left. It's a matter of time before this thing breaks down because it can come and hold this level again. Like it can absolutely do that. Just like it can come back to this level, just like it can come back to this level. You have to realize whatever the final point is, even if it is tested, it can come back to that level. Like it can even come back up to here, what is ever tested in the past, but you don't want to be in a scenario where you're in negative profits. If you've entered at, 58 because you caught something, you want to kind of protect that and take the least risk possible, right? So, in my opinion, this becomes the smartest level to stop out at. Because you're paying your fees, you're making whatever 10%. And it's not going to be often that you see the base of a move collapse down and you lose 10% here, or you see this hit and you move up and they kind of equalize each other out. So you don't really take losses over time because in one scenario, you're making the 10% and in the other scenario, you're losing 10%, right? So they kind of equal out over time. But the difference is this level, once it breaks down, it's likely going to collapse. And the same thing is going to happen at this level. It's going to collapse the move because it's the final low of the move that hasn't been tested. So kind of automatically rules out this level. Now you can stay in this trade at this level. That's fine. If you are looking for a larger move and you have the justification to do so because some bigger event has happened, you can definitely do that. But again, this becomes the smartest level to stop out at. Even you can see it on the higher time frames. Why can't it come back down to this level? Like even in the future, like why can't it come right here? This is like a clearly untested piece of this move. Like it's very clearly untested. And then so you have your target up top, right? So now let's, we talked about, we entered the trade and we've kind of defined the range and what it looks like. What do we do up top? Okay, so really the real thing here is we're in a trade. We know where to stop. That's fine. We've got our stop loss set, the final hold of the move, which of course you guys know is polarity. So of course this makes sense to stop slightly under it and you get your entry slightly below it, right? And you exit out slightly under it. The move is just failing down. You could even exit and reshort it if you really wanted to. But now you're in this trade and it's like, okay, what am I doing in this trade? So obviously, of course, at first we need to profit cap this move. So the first thing we would do is we look at, okay, where can this thing go? This is all dirty. There's nothing here. Like, what about the 2 hour? This range is tested. Can't use that. You have something kind of here. Can't really use that. Let's actually see if there's anything in this move. That's tested there. You can't use that. So you kind of have something here. So I'm going to mark this one because you're kind of starting to have some kind of range here. There's a, like you also have this. Okay. So you could exit the trade there, right? You identify targets, but just like on the bottom side, how thin is it up top, right? Like this is one target. It's pretty thin. It's probably going to go much higher than that. And then it's probably going to come back down and bounce off of this one right here. And so we're not going to mark those. Rather, we're just going to start defining targets up top. And 30-minute level. Yeah. Okay. This starts to look decent. And that 30 is tested. It's not really good. 15-minute right here. And then, all this stuff here is tested. I wouldn't really be looking too much at that. How thin is the range? Like you even have the part of the move up here, which is actually what it ends up getting to, but we're not that far yet. So we just want to look at this move right now where it is. The 5 minutes. So this is a good target. This 98.15 is a good target. You're comparing these two pieces and you're saying, okay, this is the thinnest piece of the move. This is the piece that is more logical, right? Like if it's going to ladder this, even this is thin compared to this 10.16 or whatever's up here, this 10.155 or 158 or whatever that level was that it hit just there yesterday. You're looking at this and you're doing the same thing because you've got targets and you're saying, okay, how thin are these targets on the other side? So you're in this trade from down here. You've bought this right here, whatever your entry was that we justified. Fine, we entered that. But now you're in this trade and it's like, okay, what are you doing? So you break trend. Fine, great. First thing we need to do is we need to see our trigger point on the exit. So what we need to do is actually we need to revise this to that candle that makes sense. So we have the hourly here, right? And we have the hourly right there. So we have our trend. So we have our trigger point. If we don't reach our target, we know where to exit. No longer are we stopping out here or here. Our stop is now moved diagonally like this, right? So our stop is now like this. This is our stop, right? This diagonal line is our stop. We hard close this red one and we're out. And the diagonal line becomes our stop, right? So hard close the red line, you're out of the trade. Reach target up top, you're in the trade still. Or alternatively, you go like this and stop underneath this level wherever that range is, right? So, you'd have the actual, where is that other one here? Do I have it? No, I need to make a new one. Okay, fine. Can move this one here because the green lines are our stop in this kind of scenario. And we know like it can't really hard close this time frame under this level. So that's fine. We have a pretty clear directive here of like what's happening, right? You have a stop under this level. You're stopping in profits. You're in this move. You have a trend that you hard close. You have this that you hard close. So you can pick one of these to stop at. And if you've reached both, there's nothing left in the move, right? So we were in at 96.58 right here. And we're in a scenario where 1.4% profits. Worst case scenario, we're already making 50% in the trade. So we either hit our target or we trigger out, right? So looking at this move, how do you decide, oh, this is still moving up? What's the difference between it's done its move versus it's keeping on going, right? So let's talk about that. You have to realize it's going to have targets. So this was its target, right? Like this is its target. And maybe it's even a higher time frame. So let's go back and just mark I'm not really sure what it was. Maybe it was this. I'm not really sure how we refined this thing. Let's see if there's like an actual. Okay, it's right here. It's this hourly right here, and it's defined into here. So let's just go to the greediest point into here and find where it's. So that's the top of the move, and this is tested, and this is not. So this is kind of like the final moment in this trade, right? So you've got like the final piece of polarity in this trade. Like you've got the final piece on this side. So now you're in this trade. Target was hit, but you don't want to get out of this trade yet, right? So what can you do? Well, you can do a few things. You can now do this and mark this to this, and also this guy. And these aren't stops. This is just information. So what I'm going to do is I'm going to turn these ones just yellow, because they are just yellow and thin, and they are just points of information that allows us to understand this trade unfolding a bit better. So you have something like this. So if you break this trend, expect to kind of come down to this level right here, right? Like kind of come down to this hold, or even the top, whatever. Maybe this is a 3-minute or 5-minute right here. Expect to come down to this level, right? Maybe let's find the level. Okay, yeah, right there. Expect to come down to this 3-minute level if you break this trend, right? But that's not saying you should get out of this trade. This is giving you information to show you, okay, what are you doing? So you have all these places you could stop. So you could actually do it like this. And if you wanted to lock up more profits, you could stop out like right here, right? You could stop out like $1 under this one here. So now instead of locking up, 50 down here, you didn't take 1.5, but you did take 1%. So you took the in between of both. At that point, I think I would just be taking my target. I would either be looking to see what my target is up top, or I would be looking like I don't like this as a like it's fine if you want to defer risk and you're saying, okay, you missed your target, you're not comfortable taking the knife catch targets and you want to defer risk, fine. But at that point, I think you should just be taking your target there and make your 1.5% and be on with it. Like go on your way there. Now in this trade, we have interior trends, right? So like what's the difference here of a move breaking up or down? So you have an interior trend and nothing is developed on the higher time frame, right? So we're just going to go through a few candles, and you actually have something now. You actually have a trend that needs to break to hold this move. Then you actually have another base to this move. So you have this right here. Now, this is going to hold the current range. This is going to hold the overall range. Like these are both capable. This 3-minute here and this 1 minute here, they're both capable of holding this range. So when we're in this trade, it's not like, oh man, we lost the move. That sucks. However, you also held the range. Like you could have come down here and still been holding the larger time frame range. At this point, we don't have any interior trends left. We're already showing that we're not creating a cycle at this point. There is no cycle left in this trade, right? So now we can just array this out a bit here like this, and that's fine. It's gonna probably break down a bit here, and we're gonna have to array it down again, and it's still holding the move. So you can see where not only is this holding a range, but now your trend is like this, right? Now you have a trend like this because you can't move it to this point here. That's not a real trend, and this is already broken, so you can't hard close it here, right? But you can hard close it here against this. So you see the base of the move develop. You see that you're in this move, and this is the difference between something already hitting its final target versus something already failing. A failing trade won't typically go over its high of that move. Now, this isn't always the case, but you're also breaking your trend already. You're also creating a hold in the move, the base of a move that's holding. And again, you could come all the way down to here. More importantly is breaking this trend, this final trend. But you're gonna also have a trend like this now. So you do have a few different trends here that are gonna break and show you injection points in this trade. And you can see you don't really have any hard closes under this base. So when you start to see this, the range isn't done. There's no untested holds left. Like that's the key giveaway number one. There's no untested holds left, right? And that's fine. You can move this out to here. We really don't have a point where we would stop out yet, in my opinion. There's no real stop out in this trade. Like you should just be in this trade and you should stop out if you hard close this. So what I would do here is I would do this. Take that away. And if you hard close this, I would stop out of the trade and take my profits up in a higher range before trying to come down and test this. And you can see that you've already broken the first range, you hard close it, you move up, you break the second range. Like there's no hold levels left. So like this is why levels are thin, because this is the kind of stuff that happens, just like what's happening in the past day. You have a range, and this is very different than if you were to look at this right here, where you have top of move, you have this, and you have a final hold level. These are two very different looking, and then this trails to here, right? You can see the visual difference already, and then this isn't tested. So you even have untested levels. This one's not untested, but this one sure is. So you even have untested levels. So how can you continue to break up in this range if you have untested levels, right? Like you can't. You can really only go to this point, and that's why we stop out at that point too. That's why our stop ends up being right here, because there really can't go over this. And if it does, then fine, it's breaking the range. Just like with this, there is no untested levels left. It went over top of them already. It broke its range. So how thin is the move versus where's the real target? Well, that's kind of obvious when you see the trade and the trends happening, right? Like, and then, really our key thing here is hard closing over this, because this is our polarity. So you've already started the hard close over that here. And I'm sure I think it's going to break it here. No, it didn't break it. Nice. I'm sure there is something else here in a different time frame, like maybe here, or we just kind of picked the, where's the bigger time frame here? Oh, so there's nothing there. So it actually is like a 5 minute then. So it is a 5 minute, and it does break here. And then like you're already breaking your range up. Like your range is already breaking up. And then even interior in this move, you would have this to this trend here, right? So like your stop can be this level here. If you hard close under this level here, that's your stop. This is no longer a stop. This is just what it hard closes over. So, the green is our stop here. And again, you now don't have, right? Like you don't have any of these trends. You're back up at this point right here. So, I'm sure if I click one candle here, it's going to be, no hard close yet. And that's probably the move right there, right? So you can see, like, you don't have any untested levels. Go hard close over this, and the move is gone. Like these aren't even there anymore, right? And you haven't, oops, need to leave that one there. And you haven't really gotten out of this trade, because really what you should be doing is you should be like this. Did I grab the right one? Yeah. What you should be doing is you should be like this from here to here, right? And like you can stop out underneath this trend, whatever. Oops, I need to mark this one here. So you can stop out underneath whatever this trend is here. I guess I have to kind of do that, move it sideways. You can stop there, right? Like this is what it can't really lose, and this is where you would stop. Right there, right? So you're in this trade, and you can stop out there, right? Like you can stop out there in max profits. Again, I think I wouldn't be using that in this case, because it still just clearly looks like it's breaking up. I would be more looking for the hard close. But again, this is another place you can stop out. You can stop out below the trend, because if it's going to lose this trend, I would maybe even use a deeper trend here. You don't need, like, the problem is you don't really have a trend right now. You know what you need to use as a stop on this trade? This right here. Because you don't even have this yellow trend yet developed. So as this move is unfolding, we're kind of getting to a bit of a better point here. So your stop is maybe something like this. But really, I don't even think I would use trend to stop here. This I can see as being a good spot to stop out on trend. But again, I'm not, this is kind of for visual reference. I am more stopping on I'm not setting a stop here. I set my stops at levels. You break a trend, you hard close a trend, you have to understand that, okay, if I lose this trend, the gap is to here, so I should stop out if I hard close the level, or the trend itself, right? So I don't set my stops against trend. Well, actually you can't, because it's impossible, because you can't set a stop that kind of follows the move. So you can't really walk away from your computer. It's more just a mental note, right? You can't, you pick a price, and as time goes on, that price raises. So you can't even really set a trend stop. But the idea is that, if your trend breaks and you hard close, like, you don't want it falling past a certain point, right? So